Hi, this is Ian Coleman from PIA First. It's Sunday the 15th of March. I'm going to look at the medium-term forecast of sterling dollar. A little bit different than the euro dollar video that we've just posted. If you haven't seen that one, then please go to our YouTube page, because it's also we've detailed the dollar index bias in that video as well. However, sterling dollar, we have seen a decent move to the downside. We've seen 8 months of net losses since the pair reached a high of around about 170, the figure. That was in the middle of 2014. However, there are a few factors that we must be made aware of this week, and we could see a stalling in this sell-off. Intraday would still expect sterling dollar to find rallies being sold into. But there's some key levels that we want to talk about this week. First of all, on the weekly chart, we've got a DMARC exhaustion count, and that's a 13 count. Normally when we get these counts, we see at least an aggressive correction to the upside. Okay, if we look to the monthly chart, we can also see that we're in a channel formation. We're just touching the base of this channel at the moment. We'll just break it down into the weekly. It gives us a bit more of an indication. Okay, so we've highlighted this area here. Now you can see on the monthly chart, these look like two spikes or hammer bottoms. Okay, and we're approaching the base of this channel right now. So we're oversold. We have got a bit of bullish divergence. Like I said, there's no clear indication that this trend is changing yet, but we're getting some warning signs. The Marabuzo level from last week, which is the midpoint from the open and the close, is around about 149, the figure. Our bespoke resistance level is coming in at 148.89. So I would expect that to cap at least the first move to the upside. So I'd look to sell into rallies around about 149, the figure. And then if we saw a move back through 148.50, we'd look to get to the stop to entry pretty quickly, just in case we form a head and shoulders formation or a bullish reverse head and shoulders formation. Two other things to note is that the daily chart has posted a DMARC correction count. The 6-hour chart has posted a DMARC correction count. The 4-hour chart has posted an exhaustion count, and so's the hourly chart. So we really would be bit naive to sell into this quite relevant support level around 147. The figure would wait for a 200-point bounce before we'd even consider to take shorts going into this week. Okay, good luck, and I'll speak to you again soon.